Today's video is sponsored by Figure, the largest non-bank home equity loan lender in the US, with over $15 billion unlocked on their lending platform. They're now in the crypto-backed loan space and offering industry-low interest rates when you use your Bitcoin as collateral to get cash. Access interest rates starting at 9.9%, the lowest fixed rate in the industry at 50% LTVs. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit figure.com/Real Vision or click on my link below to take out a Bitcoin-backed loan with Figure today. Hi, I want to talk to you today about my friends at Bitwise and why they're the best crypto asset manager out there. I've talked on the show often about how crypto is reshaping everything from finance, portfolios, and even macro. Everything's ramping up. We've got tailwinds in DC, interest from TradFi, and growing optimism. But smart investors see all of this and focus on the how. What's the savviest way to seize this moment? And that's why so many investors I know are working with Bitwise today. They've been all in on crypto since 2017. They're OGs. They've got more than 30 products to help investors like you get access to whatever they need or want. They've got a team of more than 100 across the US and Europe, and they have over 10 billion in client assets. You know, a lot of people know Bitwise for their ETFs, how they manage the world's largest crypto index funds and the wide range of crypto ETFs they have. But not as many people realize, Bitwise manages private alpha strategies too, and has SMAs for large investors, and is one of the largest institutional Ethereum staking providers. They really do everything. These guys are true OGs in the space, and they're good friends of mine too. So please go and check out Bitwise. They're really excellent. Go to bitwiseinvestments.com and see all that they've got to offer. That's bitwiseinvestments.com, or just email them at james@bitwiseinvestments.com and let them know that Raoul sent you. Anyway, there's a million ways to access crypto. Explore how you can access it best with Bitwise. And remember, carefully consider the extreme risk associated with crypto before investing. Anyway, thanks so much.
Hey Real Vision viewers, a quick pause to introduce you to today's sponsor, Axelar. Axelar is building the rails for the next wave of global finance. Not just crypto, but the future of how assets move, how markets connect, and how institutions plug into open systems. Think of it this way. Bitcoin brought digital gold, Ethereum brought smart contracts, but Axelar is bringing connectivity, the secure link between your favorite blockchain and traditional financial institutions, rushing to plug in. It's why top-tier firms like Dragonfly, Polychain, Coinbase Ventures, and Binance Labs are backing Axelar, and why global giants like Deutsche Bank, MasterCard, Apollo Global, and JP Morgan are already building on it. If you believe the future of finance is open, programmable, and interoperable, Axelar is the gateway. Want to digest deeper? Visit realvision.com/Axelar or follow on X at Axelar. That's AXELAR, the gateway to open finance.
Hi, here's a message from our partners, VeChain. Launched all the way back in 2015, VeChain was built for real-world utility before most people had even heard of blockchain. From powering real-world solutions to partnerships with global brands like the UFC, VeChain has boasted 100% uptime for nearly a decade, and now it's entering a new chapter, the VeChain Renaissance. This isn't a rebrand, it's a rebuild from the ground up, fueled by adoption in the V-Beta ecosystem and an ambitious technical roadmap. Renaissance is about building a faster, more flexible core protocol designed to meet the builders and drive mass adoption. It's an evolution that brings VeChain closer to their vision of a world powered by Web3 without compromising on reliability or stability. The future is here. It's scalable, sustainable, and evolving with purpose. Hi, I'm Raoul Pal, and welcome to my show, The Journeyman. The Journeyman is just that. It's me going on a journey with you to that nexus of understanding of macro, crypto, and the exponential age of technology. Over the years, I've seen many of my friends in macro move across to the new world, the new parallel financial system that is crypto. Whether it's, many of the early macro pioneers or people who are involved saw this as the big opportunity. Now, one of my good friends is Brett Tejpaul. Brett, like myself, grew up in the finance industry and moved across to the crypto world. Now, what's interesting about Brett is he runs institutions at Coinbase. And that gives us a peek behind one of the largest players in the space and what's really going on. Many people think of an exchange as just a place to transact, but I think we're going to find out that Coinbase is a lot more than that. So let's let Brett take us on that journey to understand what's going on with the institutions at Coinbase.
Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together.
Brett, welcome back to Real Vision.
Totally excited to be here. Nice to see you again.
I know, we've not done this on camera for a while. We've caught up several times, but it's been a long time since we actually spoke on camera, and I think it's easy to say you've been quite busy.
If you've been around Bitcoin, you've heard the term HODL, and you've heard Ledn. For over 6 years as the leader in Bitcoin-backed lending, Ledn has helped Bitcoin holders unlock liquidity without selling their BTC. With a focus on transparency, security, and trust, we've built a proven track record with tens of thousands of clients. But don't just take our word for it. Check out our reviews on Trustpilot and social media. Ready to see what your Bitcoin can do for you? Visit ledn.io/borrowing. See ledn.io/legal for terms and disclosures. Product availability varies by jurisdiction.
Oh, that's an understatement, isn't it? I mean, we've been at it, so it's been awesome as well. And what a day to do it too.
I know, all-time high day. So listen, just introduce yourself, a little bit of your past story as well, and then what you're doing at Coinbase, because it'll frame up everything we're going to talk about.
Okay, so I'm the co-head of the institutional business here with Greg Tusar, who runs product engineering and design. I've been here 5.5 years. And
where did that time go?
It's insane, right? And so we've got 3 verticals. We've got the exchanges and markets, which we'll get into. We've got the prime pillar, and then we have the asset management pillar. Before joining Coinbase, I was at Barclays for 17 years and JP Morgan, where I started my career for 9 years. And I've been a derivative and capital markets and everything guy. So everything from fixed income to equities, and have managed all those businesses through bull markets and bear markets and regulation and good times and bad times. And so hopefully all of that accumulated experience has informed how we built Coinbase and the institutional business here. And finally, all that building, I think, is paying off because the skies have parted, reg clarity has come, second wave of institutional capital, and that's me in a nutshell.
So I don't even know where to start because there's so many things to talk to you about. But what are you trying to do with the institutional side? Because a lot of people don't know that side of the business unless you're an institutional customer. What are you trying to do? What are you building?
All right. So to keep it simple, when we say institutional, I'm referring to the world's largest hedge funds, asset managers, wealth platforms, banks, financial services firms, tech firms, sovereigns, sovereign wealth funds. So really big institutional managers of capital. And what we're trying to do is to enable all the things they want to do within crypto in one space. And so that's sell it, buy it, stake it, finance it, have a holistic experience. And so the big play we're making is a platform trade. It's a bundling of services. And, we had our institutional summit this week, Raoul, I was just telling you about. So we've got 500 people that came to New York, and we showed this progression of all the things that we've built over time. And it's absolutely amazing. So we've managed to accumulate, like, for example, stats around our success would be we were chosen for 8 out of the 11 Bitcoin ETFs in the US. We've got 81% of all ETF assets. We're the clear choice for all the new crypto custodians, crypto treasuries that are coming out. We've got 40% of the world's largest hedge funds have all chosen Coinbase and have onboarded here. And so I think our differentiating point now, 5.5 years later, is that we have like the marquee client franchise to die for.
So we'll talk about the clients, and then we'll talk about the infrastructure side you're building as well, because that's the hidden story, which is massive. But on the client side, did you see the light bulb moment happen, the light switch turn on as soon as regulation changed? What happened?
Well, arguably the light bulb moment came on for clients prior to the last down cycle. I mean, the ETFs came during still a moment of great uncertainty, and that was a light bulb on for many, but not everyone was activated. Then we had the election and the onset of actually the tangible progress of regulation actually passing. And right now we're having a crazy moment of FOMO. So all the people that are already involved have a huge head start. And everyone else, you touched on it a minute ago, but we've launched and sort of rebranded an existing offering called Crypto as a Service. So all the infrastructure that we built, we're now offering to everyone else that wants to get in the space. So think about custody as a service, wallets as a service, trading as a service. And so that's powering, we announced some quite big partnerships with Webull, PayPal, eToro. So it's pretty cool. We have think of it like direct client acquisition, where people are onboarded onto the platform like a hedge fund. And also think about like enterprise sales would be the tech term, or platform sales. And that's powering everyone else that's sort of catching up to being involved in crypto.
Yeah, and I think reframing Coinbase as a platform is a very big thing, right? Because people are still used to the old world where it's an exchange, right? They think of it's an exchange that offers services, but what you're actually building is the platform for all of these rails to be built on, whether it's stablecoins, whether it's asset management, whether it's trading, whether it's prime broking, whether it's anything, they can just build on top of what you've built, which is big. Now, are you seeing, because not the last time we spoke, but a while ago when we had breakfast, you were talking about the banks and others using Coinbase as the rails because there's no point building when you build so much already.
Yeah, so we actually, I'm keen to announce we had our first GSIB, so that means in banking terms, really, really, really huge bank, it was actually 4 years ago we started the conversation. They flirted with the idea of, build or partner, and in the end decided to partner. And so we're going to be the custodian in all things crypto for all things digital and crypto, however they frame it. So that's a big deal. Those mandates like BlackRock and others are, years in the making. Now that the U.S. is activated and everyone sees regulation coming, we have even those that have been in the space for a while are coming to us, and all of a sudden we have active conversations across. Think of like a big U.S. bank that has a wealth platform, a markets platform, a custody platform, a trading platform, and we have live conversations on all of those.
And how big a deal was the stablecoin thing? Because I think stablecoins, I still think people are underestimating the sheer size of this. You and I grew up in the Eurodollar markets, which were vast, and that's all this is a tokenized Eurodollar that can go down to individual level, as opposed to a Japanese bank or whatever, where most of the Eurodollars came from, or Deutsche Bank or whoever it was. But this is much bigger than people think. What's your view on the whole stablecoin thing?
So if we've been at it for a while on the investment case to own Bitcoin or ETH or other things, and that's drawn the first wave of capital in. But there are a bunch of people who are senior and influential and are looking at the asset class and saying, that's not the investment case isn't the thing that we want to think about. But then there's kind of everyone else. And the everyone else crew is now look at this as a technology, and a technology that can move money. And when you think about the vast sums of money, I had a bank on stage yesterday in my client panel, and we were talking about just how far we've come at Coinbase, and we were flexing on some stats and saying, we have almost $250 billion in custody. And we talked about stablecoin payments, and they said, listen, we settle $9 trillion a day. I mean, the TAM is, enormous. So that second crew that has yet to activate is looking at just the vast sums of what they trade, what they settle, and how they move money, and saying if this is better, cheaper, faster, quicker, and regulatory compliant, then we want to reevaluate Coinbase as an infrastructure provider to us. So I think the stablecoin and payments use case is finally kind of here. I've been talking about it for the 5.5 years that I've been here, but now that market caps have grown with stablecoins and we have legislation and Genius Act on the way, I think the stablecoin wars are on. And we're going to have the second wave of capital and entrance is going to be focused actually very much so on payments.
And how does your partnership with Circle work in this?
Oh, that's all out there in the press. That's been clawed over and talked about. But we have a revenue share, and whether assets USDC is on platform, that it kind of allows us to have a bit more of the interest income relative to when assets are off platform. That'd be the oversimplification. But I'm rooting for USDC to be the stablecoin that wins. But in the end, I'm a markets guy. You're a markets guy. The market decides. So while we may have that partnership with Circle, which is great, and I hope they flourish and I hope they win, I'm a markets guy at Coinbase. So I want a marketplace to exist, and it's possible that other stable coins first get adoption in other places and other use cases first, and in the end, let the market decide, let the clients decide.
And I asked, I had Chad Cascarilla on last week. You remember you met him in Dubai from Paxos?
Yeah, he's awesome.
Yeah, he's a great guy. I asked him the question about what chains people choose when they're looking at stable coins. How do you think about that when you're looking at solutions in terms of chains? I mean, do you have to use Base, or can you use whatever solution the client needs because you have the infrastructure for pretty much everything? How do you think about that?
I don't really try to guide those decisions. I try to say, here, I'll be your tour guide. Let me do some introductions to Base. Let me show you how it works. It seems that people are flocking to Base for sure. They're making that choice by themselves without us necessarily having led them there. So I think everyone probably independently goes through their own due diligence before they find themselves here. Usually by the time they get to me, they've got a pretty good idea of how they see things, working. So I've got, insurance companies that want to collect premiums and distribute. I've got global retailers that want to do supply chain. I've got customers that want to do customer loyalty. I mean, like, the list is really long, and sometimes they come up, with the idea, and they've already got a preconceived notion of what's able to use. So my guess is, if you can get the infrastructure set up and you can pave the pathway for doing the use case you want, the stable coins that you choose can be substituted in and out. Obviously, you need to be integrated to each chain, but in the end, we're probably going to have an interoperability thing that will facilitate all that.
And what's growing faster, the client investment side, so people coming in to buy the assets, or the infrastructure side, or are you seeing both scaling at the same time? Because that's a lot to deal with.
It is a lot to deal with. There's like a rush of capital that's come back to this space, right? So now that you can see it in actually the public markets, right? You've seen the IPO window open. You've seen Circle and others come to market. You've seen all these crypto treasuries come to form, which is awesome. So capital's pouring into this space really quite quickly. I'd say the pipeline on the second part, which is the crypto as a service, is building really, really fast right now. So it's a really long pipeline. And the diligence around that just takes longer. So we've got, that's a longer sales process and diligence process than those that are already activated and on board. So, but both are in the process of peaking right now.
And what's your view on the crypto treasury vehicles? You said they're awesome. For what reason, apart from obviously they're big clients, but what do you see? What service are they providing to the space? Because people are confused by them.
Yeah, I'd say access. It would be an easy one, like, a Japanese company, MetaPlanet. Japanese don't necessarily have the access to the US ETFs, and so that's an access trade to get long. You've seen, maybe we're not staking ETFs just yet, and so some of these treasuries are doing more active staking services. So they may, also have the ability to issue converts. Kind of copy the MSTR, the strategy playbook. And so if you buy into the notion that as they can continue to hit the capital markets for funding and then buy more ETH, or, do more staking or earn more yield. And so right now it's access and like the combined product. And so it won't last for forever because you'll have enough of these treasuries keep coming, and the premiums to what they own today will come down. But in this moment where things are kind of on fire, I'd say access and the bundled, the full bundle of services, the yield generation, staking, on top of owning the crypto and the ability to issue debt, keep buying, is what's attracting people.
And I think, it's one of the things that will probably drive alt season is the fact that there's a lot of treasuries coming in all sorts of products. So it's not just Bitcoin, It's not just ETH; it's pretty much everywhere now, right? You're seeing them all in the making. Everyone's having conversations. Everyone's hearing about them, but it seems, pretty much everywhere across the board.
Yeah, we had a guy you and I know, but I won't reference him specifically. He was on stage with me, a big macro trader that you know well, and he was saying, "Hey, Brett, listen, my thesis is that when perps come to the U.S., which is this summer, it won't necessarily be alts first. There'll be Bitcoin and ETH for us July 21st, but as perps hit the U.S. market, he expects that product to be the number one by far and away, just like they are now, but onshore." And as those perp contracts extend to the alts, he's like, that's going to be the marker for the revival of alt liquidity and alt price action. And that's a pretty easy thesis for me to agree with.
And so what are you guys doing in perps? Because you made a bunch of announcements. What's the scope? You're starting trading soon, right?
Yeah, we've got a nano contract in both Bitcoin and ETH launching July 21st. So that'll be great off Coinbase derivative exchange. So I think the big thing there is that, to date, U.S. clients have had to figure out creative ways to access, offshore perp liquidity. And so being able to bring the perp product, which is arguably the best invention that crypto has in financial engineering, to the U.S., I think is going to be an easy and popular way for people to deploy capital.
It's going to drive that hedge fund flywheel for you as well, because, that's a much more efficient use of capital.
Yeah, totally. We're actually pretty excited. This is too in the weeds for this conversation, but we have this true prime offering now where for hedge, we had a prime offering for a long time, but now we've got trading and everything inside the qualified custodian. So now the largest hedge funds in the world, that was like the last thing they needed to fully activate. And so my hope and expectation is that some of the biggest and most active funds will come in and actually begin to allocate capital, not just like one trading pod, but like to the 14 trading pods that will have the ability to trade.
And are you seeing a lot of interest in Prime generally? That's another part of the business that's growing rapidly again, right?
It is indeed. So it's been not the usual, if you like, have come to Prime, but it's really been the launch of crypto as a service, which maps to some of the Prime APIs. So that's really ignited the next stage of growth. So for example, think about large, but not the largest U.S. banks that want to be able to offer services. So they can now sort of plug into custody and trading, et cetera, and then offer their customers the ability to access crypto. So that's what's driving it.
And why do you think the hedge fund space, because obviously I'm involved in that and we work with you guys on that, why is the hedge fund space so slow to take off in crypto? There's many of them, but nobody raises many assets. And it seems that you're saying, yes, a lot of the traditional funds are now coming in, deploying capital. Why is the hedge fund space itself not grown as much as you would have imagined?
You mean in AUM?
Yeah.
Yeah. So I kind of feel like we had the sort of the last downdraft in markets, and then that took out a lot of hedge funds. Then we didn't have everything that all the largest hedge funds needed. We had most of it, but not all of it, or my comment, before. But then we went to this like crazy choppy market, right? Where it's kind of hard to trade. In the past year, it's been kind of tough. And so you've got Bitcoin ripping, but it's been hard to trade. So for example, systematic trend following strategies, whether in equities or crypto, haven't really performed. And when people think about crypto, they go, okay, well, do I want this like more narrow risk profile to give me some but not all of the Bitcoin return, or do I actually just want Bitcoin? And so what we found is people actually just want Bitcoin. And so we've got a Bitcoin yield product that's going to go into the marketplace, and we've had actually, arguably for the first time, a huge pipeline associated with that. And we can see that the evidence of that is in the crypto treasuries that are all doing some form of yield generation on their Bitcoin holdings. So I think my guess, Raoul, is that as we get more ETFs, more variety of ETFs and leverage ETFs and all sorts of different things, capital will begin to find its way into the space.
Yeah, I think so. Are you seeing a lot of the our old friends of the traditional macro space, whoever's left, now fully coming into the space. I heard a great story the other day because I always benchmark everything is what would Nick Roditi do, and I was speaking to somebody who's very close with him, and he's trading Bitcoin like a crack addict, which I thought was really interesting. I don't know how old Nick is now, 80, and now trading Bitcoin. So are you seeing a lot of the macro guys now move into the space? Because that was the thesis that, Dan Moorhead was first, obviously, and then there was a whole bunch of us and Alan and stuff. And are you seeing a lot of that?
Well, just first, like a quick tribute to Nick, because I remember when I was a swap trader at JP Morgan, I met him for the first time, and I was like in awe, like
the most amazing guy.
That's him. Let's just say he was one of the first people that I met in the context of crypto, and I'll leave it to you to talk about what he actually does in this space. But let's just say, he's a legend. And so, if legends like that activated in the space and they have for some time, I'd say a bunch of them, and we know who they are. I won't name them. There was a core group, and there was another group that just hasn't been doing it, and I don't quite know why. I think it was because in a world where macro funds were struggling, they were looking for like something else to generate return from. They had a bit of a strategy drift, and people traded crypto as kind of a side hustle or side hobby. Now it's become a core investment thesis of something that has enough liquidity. And you can demonstrate that you can get in and out of the market efficiently and store it and buy it and all the things that we talked about before efficiently. And I actually think both quant funds and macro funds will be scaling their allocation from now into the foreseeable.
And how do you provide liquidity? Because part of your old job and my old job was sourcing liquidity for funds who need to move money around. How's that done now? If somebody needs to come in and buy, X $100 million worth of whatever, whether it's perps or straight spot or whatever, how's that done for these guys in this market?
Well, on the spot side, it's been done the same way we've been doing it this whole time. So notwithstanding the fact that you and I both came from principal risk trading backgrounds, and that's how we gave liquidity to clients by making prices and taking on risk. Since day one here, we've had an agency-only model. And so the way that we have accomplished that, because no one exchange has sufficient liquidity to do the billion today or a couple billion a day sort of thing, is to do the smart order routing. So we have a cluster of venues that we trust, and then we will route those orders and have a whole bunch of very, very sophisticated ways in which you can layer an order book. And I don't want to descend too far into detail, but that's the way in which we orchestrate huge buying and selling, programs. What I'm really excited about, Raoul, is actually on a forward-looking basis. We made the Deribit acquisition. I'm sure you want to talk about.
Yeah, because I remember pinging you a while ago saying you guys should buy Deribit. And you're like, no comment. No, you didn't even say no comment. You just didn't respond. And then it comes out. I'm like, really? It was a brilliant move, because for me, Deribit was so important for the space because it does most of the options, and it's like, it's too important not to be in big hands, because, you need to run an option market very carefully. And I thought it was an inspired move. Even though options haven't been massive yet, I think they're going to be enormous.
I think they will be too. So we launched what we call Intex, our perp exchange, and that's gone from sort of no volumes to quite significant, daily volumes and market share. So 5 to 10% market share, and we've had lots of, double-digit billion days. But we're missing options. And so options was the thing, the last completion of what we needed to have the full package and platform. And there was really only one platform, with 80% market share. It was Deribit. And so now that we've got that, we're, doing a tech integration, and it'll close later in the year. I'm really super excited to be able to offer eventually clients a place to trade spot, perps, futures, options. Right? Now I can see your wheels turning. You've got all the building blocks for everything that you want to achieve in one spot. The other thing that Deribit helps us accelerate is we've been talking for a while, and so long as I've been here, we've been talking about international expansion. And that's been a little slower, I think, than Brian would want it to be. And this helps accelerate our footprint. So not only does it bring, 30 billion in open interest, and I think they did $1 trillion in volume last year. But it gives us an anchor in the UAE, an anchor outside. We've had it for a while, but like a big and scalable presence outside the US.
And how do you compete with the existing options that are out there? How does that work? Why should people go to Deribit versus, what the CME is doing or whatever?
I think the answer we've learned that like liquidity begets liquidity, and so put a Coinbase wrapper on top of it to get that trusted brand, or the amplification of two trusted brands is probably the better way to say it. I think will bring much more capital into this space. So we can go more into like the construction, the contracts themselves, but that's probably beyond the scope of this conversation. So being able to do everything in one place, I think is awesome, and taking on other liquidity pools, you'll see the fight unfold.
I just don't understand how you've got the bandwidth to do all of these things and then integrate these things as well whilst sprinting a marathon at the same time. By your face, you're like, yeah, that's right.
Yeah, there's some truth to that. I'm actually gonna take a couple weeks off. That's my clever plan. Take a little bit of rest. It's been a 5.5 year sprint without a break, but the time is also now. It is an incredible challenge, but actually just having had our onsite, we've identified the big rocks for next year, what the focus is. So it's going to be international expansion, it's going to be derivatives, and we're going to narrow the focus and make everyone keep building. And so the big thing that we're working towards is, now that we have all these different component parts, it's just making the seamless experience across them all. And that's going to take cross margining across all these different things, a central risk engine, central financing engine. Our portfolio margining already has 85 different pairs for hedge funds. So it's awesome, but it is actually a reasonable amount of hard work.
And what about on the asset management side? What are you working on there?
Well, that was my reference to the Bitcoin yield product. So that's coming up. We've got a dynamic fund. I think what's happened is that it's a small group of people. They're amazing. They have the best pedigrees, great systems. They've passed institutional due diligence for a while now, but as you said, assets haven't been flowing in yet. And the number one thing really has been regulatory clarity. And so with that sort of cloud parting in the US in particular, we've seen a lot of wealth platforms. We're seeing RA platforms, the same kind of or similar enthusiasm that we saw for the growth of ETFs is in part reflected in terms of wanting asset management product. So it's still a small-ish business, but I have great hope that it will scale. One of the things that was kind of cool is that we launched the Coin 50, which is an index. I've been wanting an index, and Brian's been wanting one for a number of years. And then not only did we launch the index, so the IP of it is from Coinbase Asset Management, but then we actually launched a perp contract, and so that'll bring some liquidity to the tail. But it's cool, again, going back to our former lives. If now you've got options, perps, spot, financing, cross product margin, indices of, you can customize anything, right? And then we haven't even talked about tokenization.
Yeah, that was my next question. We'll come on to that. But
crypto's matured a heck of a lot. But now I think the big picture answer to institutional capital is, can we get exactly what we want at the time? And if you have all those tools, you can construct the package, whether it's an actively managed package, it's a structured product, it's an index. But if you can give institutional capital a menu of options as opposed to just one, they're more likely to allocate capital.
Well, it just feels more like the world that they know. It's the same questions then. Hey, how do we structure this? Oh, we've got the options, we've got the perp, we've got the swap, whatever it is. It's like, oh, okay, this is the same world that we're used to. Because before, everything was a bit clunky and nothing was all bundled together. But the closer you bundle it, the more it becomes like the services that they know from every other investment bank. And what about this? The other thing that people talk a lot of, right now the market's getting very excited about stablecoins because there's a shit ton of, the TAM is massive, as you said. It's almost infinite, right? The TAM of money is big. But real world assets, something that gets talked about a lot. What is really happening there, and who wants to move on it? What kind of players first? Because I know, Franklin have been doing some stuff. You guys have been doing some. People have been tinkering still at the edges, but it's not yet the big thing.
It is not yet the big thing. And I think, learning all the lessons that you and I learned early in our careers, I was listening to someone talk about, Hood's announcement about OpenAI and SpaceX and the complexity of not knowing how the contract settle. I mean, you and I are old enough to remember like Procter and Gamble and the Bank of Korea and all the whole, early years of credit default swaps, and was it really a credit default or wasn't it? And how do we settle the contract and the two sides and all that stuff? And you can just see it playing out again in crypto if you don't give a lot of thought up front to exactly how these contracts settle. So coming back to the point, there's a long and very eclectic list of everyone that wants to tokenize stuff. I'll put it in I'm doing this for the first time, but there's the TradFi world, which I think is interested in technology, ease of use, the sort of end-to-end cost of maintaining assets and tracking them. And, we're not long that problem as an industry in crypto. We're not. So that's kind of more like the banking world's problem to solve. If you look at the asset management community, when they look at tokenization, I think they're mostly looking at avenues to distribute more funds. So if you can make, for example, U.S. funds, the tokenized version of it available to Europe, for example, if you can, and it's a good thesis to have, but you can't make an illiquid asset magically liquid and perform perfectly, right?
No, that's right. It's like real estate people who sell real estate want to tokenize it. The buyers don't really want it. There's a bit of a mismatch. Like all the private equity guys, they all want to tokenize their funds. I mean, Apollo's huge in this as their big thing. But I'm like, who's the buyer of tokenized funds? Because they're hoping it's going to be retail, which is the last buyer who hasn't bought PE yet. I'm like, the kind of returns that retail get, if you're going to buy a token, you're going to buy a crypto token that goes up a lot. You're not going to buy a 10% a year asset.
Well, I don't know. I might challenge you on that.
I don't think so. I just don't think young people give a shit about this stuff anymore. I think the PE companies want to sell this stuff because they've run out of major buyers.
I think that maybe for the younger demographic, they may not be as up to speed on some of the epic returns that have come from private equity, over the years, and they haven't had access to it. They probably don't have exposure to it. So I think it's probably more of a lack of awareness thing than I get the fact that they're probably drawn first to crypto, and that's more fun and for all sorts of great reasons. But I think my thesis would be over time that if you believe in the democratization of things and equal access, and it's a really strong thesis for supporting tokenization. I'm not sure exactly when it happens, and how much of the retail population winds up, investing. Maybe that feels a little further out there, but I like the idea of it.
Something that is clear to me is this whole model around VC is about to change just because of capital formation in crypto is now so fast, and you can distribute at scale amongst so many people that you can lay off risk really fast in how it's done. It's just fascinating. When you saw the Trump token launch, it wasn't the fact there was a Trump token. It's because it coalesced so much capital in like 2 hours. I was like, that was a wake-up call to me. I'm like, holy shit, this ICO market is going to come back in a big way.
Yeah, I haven't thought through it from like a business model perspective on the buy side, but I think your point is dead on. I mean, yeah, the most notable thing was like, holy cow, look at capital formation and how much happened in a few short hours.
Because remember, in the past, you have to go show your deck around a bunch of VCs, blah, 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 blah. Here, you capture attention. People understand the story. You distribute risk amongst thousands or tens of thousands of people instantaneously, so people take off the bite that they need. That's amazing. And it all happened in 2 hours.
I know. Just think about, again, where we grew up. I used to run CLO structuring. I used to, have a pipeline of deals, and then fly around the world and try and sell 3 deals simultaneously for 3 months, all with the hope of selling 300 million of equity. And it took 3 months and a million meetings, one-on-one, to do it. And now look at what crypto's done. It's blow your mind transformational.
Where's it all going for you? If you think of your plans over the next, 2 years or so, where's going to be the real focus? You've said, okay, you want to just tidy up the whole package offering to make sure you've got this great product. You've obviously got to keep your eye on any competition coming up. But where do you think the next phase for what you've done? Because really, almost everything you've been building over the last 5.5 years is giving birth. And the next phase of crypto is going to come behind that. What is it?
We just did a survey. I think it came out today, and it's on our thread, our Twitter thread. But I think people that were surveyed said they wanted to allocate up to 5% of their asset portfolio to crypto. And so I think, for the deployment of capital into crypto next, 2 years out, that's a huge number. I mean, I don't know what our market cap as an industry is today, but it's still tiny relative to everything else. And people don't really talk about, 3 to 5% allocations. Maybe with the rise in Bitcoin price, they have some of that, but it's been tiny. So I think the manifestation of actually being allocated to crypto, I think will happen. The second part is kind of goes back to the first part of our conversation about crypto transforming financial services, the technology and infrastructure play. And so I think that will mature. And so that, in terms of driving revenue, I think that business scales in the next 5 years. And that arguably could be a bigger, revenue, profile than the current one. So probably those two things is what I'd say.
Yeah, it feels to me that, and you and I have chatted about this in the past, the whole infrastructure as a service, essentially, crypto as a service, is vast because there's many banks who are going to want to tokenize stuff. Well, you've got the platform for that. There's many banks that want to build stable coins and payment rails. You've got a platform for that. You've got all the corporations. I mean, there's no reason why these massive multinationals don't just use stable coins as their internal settlement. It's so much more efficient. So the scale of who wants to build on these rails outside of the investment thing, I think maybe even bigger. But as you know, that drives on-chain activity, which drives up the number, which brings in the investors. So it feels like that flywheel is the big one that's going to come.
I couldn't agree more with you. That's exactly what we're doing. And I can't speak for the other side of the house, so to speak, on the retail side, but I know that Brian talks a lot about payments and actually bringing these use cases to life. So and CAS now, we call crypto as a service, that whole infrastructure play. So I think we believe in that same thesis, Raoul.
Yeah, it just makes total sense for me. They're both so many economic incentives to get both of those right. For anybody using payment rails, the savings are huge, or the tokenization for distribution, as we just talked about, or capital formation. Okay, that's huge, which drives the price up, which drives the investors in, which is why when in Global Macro Investor, I look at log regression charts of adoption curves, price, market cap. I think this space goes from 3.5 trillion today to 100 trillion, and I think we do it in 8 years. And that would assume a lower rate of growth as well over time. I mean, that's the largest, fastest accumulation of wealth in human history, the largest, fastest accumulation of value in any asset class. And then you think what it means for the equity in the space value as well, not this token space, because many of the companies got equity. What that unleashes is gigantic.
I love it. I love your vision. I love your big picture thinking. That's totally aligned to it. I had this eclectic panel yesterday of different types of people, and we had this one ginormous bank on it. And I asked them, so I share your vision, by the way, and where we're headed, but I get humbled pretty quickly sometimes when I say, hey, what do you think about IBIT and, the massive scale? And didn't anyone there say ooh, wow, it's BlackRock and look how much capital came? And they said, it was just a trade. It's like peanuts. It's nothing. And so it was pretty funny. And then he reminded me of just how big the balance sheet was and their volumes and all the rest of it. But anyway, we're headed fast in that direction that you talked about. And I think crypto is going to eat financial services and transform it. So
the other thing that's interesting to me is because of the other parts of the business as well, you're going to get a lot of opportunity for wealth. There's going to be a lot of wealth from people in the space, of which you can service that in a number of different ways. And we saw that with the banking model as well. Goldman, JP Morgan, everybody, that became actually the high margin big business that came afterwards. Is once you enable everybody on this platform and the opportunity to invest, you generate a lot of wealth, which then creates yet more opportunity.
Yeah, so we were arguably a little late to form a high net worth team here. And so we now have one, and they're working overtime. And so with that wealth creation, we're seeing they have a desire to do more things and sort of be like tax efficient, capital efficient.
Like buy NFTs.
NFT, art NFTs, fun stuff. And so, but that's a high touch, service type call.
High touch, high margin,
High touch, high margin, and they love it. And so, yeah, I see that as being this wealth creation that you just talked about is going to lead to another opportunity for all of us to provide those services and tailored products for sure.
Do you know Devesh Makan, who started Iconic? So
I know him, yeah.
Yeah, amazing, because he happened to be the kind of wealth management banker at Morgan and Morgan Stanley and Goldman back in 2000 when everybody got fired and he was the only person left. And he just went to coffee shops and hung out in Silicon Valley and met Zuckerberg and Reid Hoffman and Reed Hastings and all of these guys, and then built this massive asset management firm just from those relationships, because as their wealth goes up, their demand for products and services goes up as well.
Yeah, we know them well. I can't comment in terms of exactly, how well we know them. Let's just say we know them very well. And he definitely had he was ahead of the curve on that. But now what I'm seeing is all the other wealth platforms, and again, won't name them, but you know who they are. They're actually heavily invested in the idea of charging forward here. So, and the first tangible evidence of that was actually getting the listing of all the ETFs on those platforms. But now it's kind of interesting. The past couple of weeks, we've seen a couple of those same wealth platforms say, they have the ETFs, but actually for some reason my client wants to buy spot. So can we talk about how that would happen? And so it's nice to have a menu of services to allow them to both own the IBIT and then also, or the other ETFs, and also own spot. Yeah.
It also feels like, if you're building the platform that you're building, that investment banking is the other part of it. So that is the capital formation side of the business. I know it's not on people's radar screens yet, but I see every signal that the ICO market is going to become much larger than people imagine, much faster than people imagine, as a different form of raising capital. And it just feels like that whole investment banking thing needs to be rebuilt as well for this world.
I have to think about that. We just made an acquisition. Did you catch that on Liquify?
Liquify, yeah.
Yeah, so it's like token.
What does Liquify do? I don't know them very well.
It's like token management for LPs. So they invest in early calls and sort of all the admin to support your investment and sort of vesting schedules and the full complement of services. So that's one of the places where we're trying to help more protocols to come to market sooner and have a comprehensive solution. So that's why we do that, so we can be more involved in day one listings. Exactly how the investment banking and go-to-market thing happens, I don't know, Raoul. I think there's an on-chain crypto native thing here that we're working on in terms of enabling entrepreneurs to be able to do their on-chain solutions, in the absence probably of any bankers, to take out all the friction and high-touch stuff and just allow ease of use to market.
Yeah, I was having an interesting conversation with Sandy Call, Sandy from Franklin.
Yeah, she's awesome.
Who's lovely. And we were talking about some of these giant corporations that are existing now can tokenize different parts of their businesses. So if you think of a conglomeration like Exxon, right? You might not want to buy the oil refining business, but you want to buy the wind turbine business, or you want to get streams from that or whatever. And we've got the ability to have smart contracts, so we can, once regulation fully allows it, we can attach different different income streams or price appreciation streams. And it allows businesses to be very efficient in allocation of capital. They want to build this business. They can then issue a token, use that business, share some of the revenue with the token holders. I think there's something that's going to happen there as well. It won't be this cycle, but over time, I can see businesses using it as a different way of accessing capital markets in a more very defined way that you can measure the risk reward of the bet that the CEO is taking in allocating of capital.
That's actually really cool. I never really thought that one through until you just mentioned it. So I guess that would be the manifestation of crypto really having infiltrated financial services, if today's bankers are going to be offering tokenization and hiving off or giving people access to a component part of the business via this mechanism, that would be awesome. And we'd be all over it as a crypto as a service offering to say, let me help us enable it. Yeah.
So, probably the best example of where you'd want to do this right now is actually Google or Alphabet. So Alphabet have a bunch of businesses, and maybe you don't want their ad business anymore, but they've got all this other cool lab stuff that they could then separately fund, tokenize, share some of the economics, but then you also get the distribution and the social graph and everything else that comes with tokenization. That, my guess, would triple Google's share price.
Yeah, because you don't have to go through the sort of hiving off of the amputation of a limb and the retention of the people and the capital markets and who's going to run it and how is it still going to be profitable if it's been sort of kicked outside the umbrella of that. Yeah, that's brilliant. I hadn't thought about that, but I love your long-term view.
Yeah, generally people only see today, and really the game is seeing where we're going to go, because that's what you've got to build towards. You say, okay, right, we've won the big battle, which was like, okay, the game is on, we can start tokenizing stuff, and everyone can start investing in this stuff. Okay, great. But then what's the knock-on effect, and where's the really big opportunity from that? And that's why I start thinking about, well, we're going to create a shit ton of wealth. So wealth management in a more integrated format that is more digitally native.
I think you might have some ideas on what to do with that wealth, right?
Yeah, exactly. Got plenty of ideas. Digital art might be one of them. And then the other side is, okay, if tokenization, real world assets is a big thing, people think, great, let's bring equities on chain. Great. And I've been, you and I have talked about that a lot. Robinhood are now doing it. Kraken are doing it. It's going to be the big thing, right? All assets are coming under the same pool on these rails. But then after that, it's like, okay, well, what else does this technology allow us to do that's never been done before? And it's a lot of stuff. What we think of as the kind of derivative markets and the hybrid markets that we grew up in, we don't think that smart contracts can be that. They can be anything.
Wow. Another big thought to sort of chew on.
Yeah, I just think there's a wholesale change in what happens. So how are you going to crack the international side? I know you're building an Indian business now, which is brave because India's been stop, go, but obviously one of the biggest opportunities in the world and pretty crypto native population as well.
I'm not involved as directly in the India part of things. I'm more involved in what you'd see the classic sort of international financial centers. My focus right now is really in the post-announcement, pre-close, Deribit and UAE, and thinking about that as a hub to service the rest of the world. I'm thinking about our MiCA license.
How is Europe for you as a somebody building businesses and operating with different regulatory jurisdictions and different levels of reticence or acceptance? Where is Europe for you guys? And the UK as well.
Yeah, the UK and Europe together are a big percentage of our business. So if you remember back to the US being probably the biggest market from our former lives, and then Europe being kind of 30-35%, sometimes more, sometimes less. That's really super important. And having the ability to passport across the 27 member nations there, plus the UK and Switzerland, is really important. So I kind of feel like the Europe at times was ahead, but now is behind. And so I kind of see Europe and the formation of capital, the deployment of capital, and post-MiCA, we got to be compliant with MiFID as well. It's coming now. And so for us, we're not going to take we're going to be regulated here, but unregulated and outside the rules over there. We're going to be regulated in all the proper places. And the cost of doing that is significant, but we achieved our MiCA milestone about probably 3 months earlier than I think we thought it might take. And so that's an important part for us. When Europe, we post-financial crisis, we went through the same thing. They established these sort of Mount Everest of compliance regulations. So it creates a real difficult bunch of things, criteria to meet to be able to scale up business. So having achieved that for Spot now and MiCA and Prime, I think it's awesome.
Outside of hedge funds in Europe, because they're mercenaries and will go anywhere looking for opportunity, are we yet seeing European institutions, wealth platforms in the space outside of Switzerland? Because I still don't get much signs that there's been a lot of allocation yet versus the US, which seems to be more vibrant on this side.
That's true. I think you've got your finger on the pulse there. They were slower to form, but I think now they'll come. I mean, particularly with not just today's rally, but with I think Europe's appetite to allocate capital has in part been informed, and I can say this having lived in the UK for 12 years, in part informed by what the US is doing. So when the US is like anti, crypto, which it was for a while, Europe was allocating, but it wasn't massive. Now that I'm always traveling US, outside the US, UAE, Singapore, London, everywhere. The attitude of rest of the world has been, prior to this administration, was we have a little bit of a head start over the US, and that's kind of fun for us, but they weren't really allocating capital. Now that the US flipped and, the ETFs have ballooned, and I travel abroad again, they look at the actual evidence of US regulation and passing bills and things moving. They're having a case of FOMO and catch up. And how do we keep our markets competitive? How do we keep the US from actually sucking everyone back, to that core market? So I would say the strange but true, the US changed their position has been a catalyst for Europe to actually reawaken.
Because, if we go back to earlier in our careers, we'd find actually a lot of the innovators were the Scandi pension plans, the Dutch big pension funds. I mean, these guys would swing around size doing all sorts of interesting stuff. They were quite risk takers and innovative, and they feel like they got left behind here somewhat. So I guess they've got to play catch up at some point.
I totally agree with that, and they were always the ones that were the first ones to do the illiquid asset or to earn the extra yield for trading their long-term sort of horizon for a bit of yield in one way or another. What I'm seeing now is actually it's the European asset managers who I think have looked at the US asset managers and BlackRock in particular and gone, "Ooh, look what they've done. We need more of that on the shelf here." And as they move towards saying, well, let's have a European asset manager deploy capital, in the space, I think it'll perhaps attract some of that pension fund, that dormant sort of allocation of capital from those players. At least that's my thesis. I'll tell you more next time we do the podcast.
Yeah. The other one that shocked me is last time you and I caught up was at the beginning of our Dubai trip. And then I was shocked because, I went to see some of the sovereigns and stuff and okay, this is there are two mandates in the entire region. One is AI and the other's crypto. At every scale, from building economies on it to driving licenses to everything, payments to investing in it via the sovereigns. I was like, wow, okay, this is not what I expected, because that was a big shift as well. That kind of happened this year.
Yeah, a couple of years back, we had Abu Dhabi Finance Week. Remember when we had the drone show and it was like the big announcement on crypto, and I thought it was all happening. But then the following year was all AI. And then it was kind of a return of crypto, this year. I got to say, I take my hat off to them because they're really thinking about and sort of driving innovation, as you said, with driver's licenses and all sorts of different practical use cases in addition to the investment case. I still feel like they're really at the beginning, though. So maybe, I don't know exactly how much has been allocated by those funds, but I feel like they're interested in doing more. I feel like that's where active management and, maybe some local solutions could really work. Hopefully the Deribit acquisition gives us a lot more trades.
Now, you guys on a US level are, by far and largest, and in Europe as well, but then Binance is out there also trying to build a business. How where do you come across them? Where is that thing? Is that the Middle East, and that's where it starts, where suddenly they start having, a big presence in the market?
I don't really run into them very much in the sort of more narrowly defined part of my institutional job. To be, yes, there's a subset of crypto hedge funds and crypto natives that do a fair amount of trading there. The crossover that I see the most is actually with the clientele that trades on our Perp exchange, and probably the clientele that trades on Deribit. And so, yes, we run into them all the time in the Middle East, but in the classic sort of institutional with a capital I, the types of investors that I named in the beginning, I don't run into them very much.
The other thing I was just thinking through, just Deribit keeps going around my head. Another part of the market that you and I grew up with was structured products with guaranteed return funds and all of that stuff, and having an option, a big option platform with liquidity, you can build a whole lot of interesting things. And again, because I remember the Germans, the Dutch, the Scandis were all buying this stuff, and the Asians would be the other ones. They'd be this vol sellers and doing different stuff. It feels like there's going to be a lot of explosion in that as well.
Yeah, I'm going to have to rehire all my French quants from Polytechnique. They've gone from equity derivatives into crypto somewhere. I'm going to have to reassemble all of them to have the most complex derivative book on the that no one can mark.
So you can then blow up.
Yeah, sorry, it was cross gamma. What? But I do see that coming. I mean, I've been an early advocator to do structured products. I mentioned it, earlier, but I just come back to the point that having that full set of products allows us the ability. Now we have a lot of tools to play with to create those custom risk profiles. So I hope it comes. It'll come.
Yeah, it'll all come. It's just a matter of time, as you said. I think we've got the foundations now in place for a further acceleration on what we're going to use this stuff for and how we're going to use it. Listen, Brett, amazing conversation. I think there's a lot in there for people to digest, to try and understand. I actually don't know how you do it. You're there's too much going on all at once, and it's all going exponential at the same time. So well done you. You need a holiday.
I do want a holiday. By the way, well done you. How do you keep track of all this stuff? You're the most interesting man in crypto. I can't wait for our next dinner.
Because we're having fun. That's the difference.
Right? It's energizing. So you're the best. Thank you for inviting me on. Love talking to you, and I can't wait to see you.
Yeah, can't wait to see you. I'll see you sometime end of the summer, somewhere in New York, probably. I love these conversations with Brett. Really smart guy, lovely guy. And he just opens that curtain for us to give us an understanding that it's a privilege to hear about how big a scale what is happening in financial markets amongst the financial market participants. Whether it's on the investment side or the building side, everybody's doing it. This is a very big thing, and people don't yet understand it. People look at number go up, but adoption number is going up too, and at scale. Anyway, see you next time.
Hey, Real Vision viewers, a quick pause to introduce you to today's sponsor, Axelar. Axelar is building the rails for the next wave of global finance. Not just crypto, but the future of how assets move, how markets connect, and how institutions plug into open systems. Think of it this way. Bitcoin brought digital gold, Ethereum brought smart contracts, but Axelar is bringing connectivity, the secure link between your favorite blockchain and traditional financial institutions, rushing to plug in. It's why top-tier firms like Dragonfly, Polychain, Coinbase Ventures, and Binance Labs are backing Axelar, and why global giants like Deutsche Bank, MasterCard, Apollo Global, and JP Morgan are already building on it. If you believe the future of finance is open, programmable, and interoperable, Axelar is the gateway. Want to digest deeper? Visit realvision.com/Axelar or follow on X at Axelar. That's AXELAR, the gateway to open finance.
Hi, here's a message from our partners, VeChain. Launched all the way back in 2015, VeChain was built for real-world utility before most people had even heard of blockchain. From powering real-world solutions to partnerships with global brands like the UFC, VeChain has boasted 100% uptime for nearly a decade, and now it's entering a new chapter, the VeChain Renaissance. This isn't a rebrand, it's a rebuild from the ground up, fueled by adoption in the V-Beta ecosystem and an ambitious technical roadmap. Renaissance is about building a faster, more flexible core protocol designed to meet the builders and drive mass adoption. It's an evolution that brings VeChain closer to their vision of a world powered by Web3 without compromising on reliability or stability. The future is here. It's scalable, sustainable, and evolving with purpose.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.